We've got both Avinash Koiksakkar and Ruchit Jain joining us today. Let's also go across to Ruchit first. Ruchit, we were just discussing policy expectations. Market's a little quiet ahead of that today. What's the kind of range that you're looking at?
Well, in Nifty, if we just observe last week on Monday, it had given a gap down opening near 8500 mark. And in the same week itself on Friday session, we saw the momentum was positive that gave a good closing above that resistance area. So probably the good thing about this in this last 3-4 days of move is that the market breadth has been robust and is in positive in favor of advances. The CNX mid-cap index has been making all-time highs. So this shows that rather than Nifty, there is a lot of broad market participation outside Nifty in other mid-cap stocks and so. So we are expecting this positive momentum to continue even tomorrow, whatever after the policy itself. I think on the higher side, the market has still potential to go up to 87.30 mark. So we are still trading with a positive biasness unless we get any negative signals from the market breadth or so.
All right, Ruchit, fair enough. All that thought, let me also welcome in Avinash Koiksakkar joining in as well to discuss the fundamentals of the market. Avinash, we're just getting a technical perspective from Ruchit out there, but what do you make of this move that we're seeing one day ahead of policy? Is there some bit that the market's probably reading in a little bit into the policy?
No, I think the markets are happy that probably crude prices have softened, monsoons have picked up. So I think there is some element of hope that possibly the rate cut could happen. I think although personally I feel we could possibly have to wait till September. Clearly tomorrow what kind of commentary comes from the governor, I think if it is a dovish commentary, I think it should be welcomed by the markets. And more importantly, the news flow for PSU banks in the last few days, government promising about 70,000 odd crores over the next 4 years. I think that is definitely more positive. If you see the rally in the last 2-3 days, it's basically the banking stocks which have actually pulled up the market. So my sense is tomorrow if the rate cut doesn't happen, there could be some short-term disappointment, but the RBI governor commentary I think is going to be the key. If it's going to be dovish, I think something will definitely turn positive. I think clearly, we are now moving into a period where possibly softer crude prices are obviously going to have a positive impact on inflation. And I think to that extent, the rate cut definitely now looks probably possible. Maybe not now, but maybe in the coming policy.
What about markets as well, Avinash? If you're saying that banking is the one driving it, there's always that risk that is going to reverse. What's the kind of level that you're watching out for?
No, I think clearly, I think most of the market participants have actually gone wrong because, I think now 8500 has come, we are settling down quite comfortably there. My sense is, I think, at least in the short term, what happens in the parliament, because clearly the Congress is now clearly opposing any, activity in the house, and if we don't have the GST getting cleared by 13th August, which is the last day for this monsoon session, I think short term there could be a kind of a small correction because that is going to be a key sentimental driver for the markets. If at all it doesn't happen, I think the deadline for GST, which is April 2016, is not going to happen. So clearly in the short term, markets have gone slightly ahead of what the street is expecting. I think a rate cut or maybe a GST happening. If both these things don't happen, obviously it's going to be a small sell-off. Clearly 8300 would be a level which I would be looking at, and at these levels I think I would be little cautious because earnings numbers have not given that kind of comfort. If you look at the PSU banks, few banks have done well, but if you look at infrastructure, you look at real estate, construction, I think there are very few stocks and sectors which have actually performed very well. So probably it would be a good time to actually nimble and get into value when a decent correction happens, which has not yet happened till now.
Fair point, Ruchit. What do you think of the bank Nifty out here? And if you've got some perspective or technical outlook on some of these large caps, they've again been holding steady, as Avinash was mentioning, that it's really been the banking pack that's managed to lift the market in the last 2 or 3 sessions. Bank of Baroda, SBI, ICICI, PNB, all of them showing decent moves. Any of these stocks on your radar along with the bank Nifty?
And in Bank Nifty, we are watching for the resistance of 19,100, which since last many trading sessions have not been breached. Also, if you see falling trendline resistance comes around this 19,100. So in tomorrow's trading session, if this 19,100 is breached, then I think we may have a good further continuation of the upside momentum which we have seen in last few days. Amongst the banking stocks which we see, if you observe, then few of the PSU banks such as State Bank, Union Bank and Bank of Baroda, These are the three PSU banks which have started giving impulsive up moves. Now, since last 6 months, they were in a corrective action, and now after a sideways consolidation, they have started forming this higher top, first higher top, higher bottom, and an impulsive move. So this is a sign that the downside now for these PSU banks seem to be very limited, and any corrective action in the stocks due to any negative news flows would be used as a buying opportunity. So probably we are bullish on some PSU banks, and we think that especially these large cap names amongst PSU such as State Bank, Bank of Baroda, and Union Bank will continue to go up and do good going ahead.
All right, so that's as far as the banking pack is concerned. But remember, all eyes are on the RBI policy tomorrow. Now, a poll of bankers says that by Bloomberg TV India rather reveals that most bankers expect a status quo in the policy tomorrow. In fact, most bankers polled do not see more than a 75 basis point cut for the remainder of FY16. Saroni joining us with the highlights of that.
Well, clearly an overwhelming majority of bankers that I've spoken with clearly saying that they expect a status quo in the August 4 policy that is slated for tomorrow. As far as the quantum of rate cuts in FY16 is concerned, if we see compared to the last poll, it has come down drastically. Most bankers expect that for the remainder of the year, there will be a 50 basis points cut in interest rates from here onwards, and about 25% believe that there will be a 75 basis points cut in repo rate. As far as SLR changes is concerned, they expect about 70% expect that there will be a change in SLR, and a large part of them expect that there will be a 50 basis points cut in SLR. As far as CRR and the daily limit of CRR is concerned, bankers do not see any change. I also asked them whether they see changes and the pickup in credit growth. A majority of them saying that their target has clearly moved from the second quarter to the third quarter to the fourth quarter. They are not seeing a credit pick up before the end of this financial year. As far as risks going ahead are concerned, of course, unseasonal rains, subnormal monsoons continue to be one of the most watched key issues. Geopolitical risks and inflation will be some of the key triggers that bankers will watch out for. Back to you.
All right, those are some of the expectations that are coming up out of policy. Avinash, talk about rate sensitives. You mentioned real estate, and we've been focusing on that in detail today and talking about how the sector continues to face such troubles going ahead. What would you do with some of these stocks? Because we still keep hearing of these massive investments and, how they're continuing to develop and so forth, but we've seen what's happening on stock prices.
Quite frankly, Abha, it's better to buy a flat rather than punt on the real estate shares, because if you see most of the companies, DLF or maybe Unitech, I think the promoters have personally made a lot of money. DLF came with an IPO price of 650, and I think if you look at the debt on the balance sheet, 21,000 crores. So even if a rate cut does happen, it's not going to materially change the interest outflow. So I think there are some few examples like Godrej Properties or Oberoi Realities. These are companies which obviously have a healthy order book, a very good capital structure. So I think if at all anybody wants to put a exposure on the real estate market, I think clearly stay away from the FNO stocks. I think get into value, and probably for the next 2-3 years, because obviously real estate is one sector which is going to benefit once infrastructure plays out, once the economy gets into a positive trajectory. But in the short term, I don't think it's going to be an easy way out. I think at least for the larger boys, something like a DLF or a Unitech or even a SDIL, I think all these companies are besieged with problems of debt. There are some corporate governance issues, promoter pledging has happened. So I think clearly if an investor wants to stick to this sector, I think clearly there are some good choices, something like a India Bulls Real Estate, where obviously the promoter has actually said that he'll be buying the stock at a decent premium to the market price. So today, incidentally, the results are also there. So clearly, I think, you have to be selective. Otherwise, making money on real estate is going to be a very difficult job.
In fact, the realty companies in the last couple of days, probably in the hope of something from the policy meet, have got active. But otherwise, as Avinash was saying, the woes continue when we talk about that space. Ruchit, any thoughts on some of these recent movers? Unitech, DLF, all have got active. India Bulls Real Estate, also another name that's been somewhat on the radar in the last couple of weeks or so. Any strategy when we talk about the real estate pack?
Priyank, if you just observe this long-term weekly charts on this real estate companies, then there is still this low top, low bottom formation continuation. And when the stocks are generally in a downtrend, then obviously the pullbacks really are sharp. So we don't think that still any of these stocks of real estate companies will start moving significantly higher from current levels. But rather there is a good opportunity in housing finance companies if anyone is looking to buy fresh. Several mid-cap names such as Diwan Housing Finance, Indiabull Housing Finance, they are doing good and forming this higher top, higher bottom formation. So there's an uptrend seen in housing finance companies where I think there's a good opportunity, and one should look to go for any kind of investments in housing finance company rather than buying real estate companies.
All right, let's also get in a view from Anup Bakshi. Where we asked him as well on the road ahead for Indian markets, his policy expectations and more. Listen in.
I think we are quite positive about the market. I think all the stars are aligned towards us. Commodity prices are down, oil prices are down, gold back has been broken, and we are all big importers of all of it. So you can see EBITDA rise because of that, margin increase because of that. So I think we are in a good wicket. I think inflation is coming down. To that extent, I think we have a chance of a rate cut. Maybe not tomorrow, but we certainly have a very, very good chance of a rate cut.
That is going to be my next question.
Yeah.
The moment you start focusing on inflation, the next obvious question is rate cut.
And WPI is negative. So WPI is negative, CPI is coming down. So obviously it builds up a good case for a massive rate cut actually, not just tinkering rate cut. So I think it's all in positive. So to that extent, I think we are well off.
Okay.
Plus emerging
but you
markets
don't think there will be a rate cut tomorrow? You think that that's going to be a little more delayed? Because you've already had 3 rate cuts if you look at the calendar year. So, and someday I feel that the markets are looking, I mean, there is a hope, intrinsic hope in the markets that they could be a surprise. What do you think?
I would say that, maybe we should wait for another quarter, look at CPI to really stabilize and come down, and then have a massive rate cut instead of 25 bips. Because 25 bips I have seen in the market, they just get discounted and it doesn't really give you that kind of fillip in the market. So I feel that if we delay a bit, I think we can in for a massive rate cut, which is already positive. It will kickstart rather than just sort of do a little bit here and there.
Okay, it's been a volatile period for the markets. We are up about 18 points at 85.50. Asia has been weak through the morning, Anup, but what's interesting is that we're also in the midst of earnings season. It's not a pretty picture. So why are the markets up like this? Where is the relative strength coming according to you?
No, I think from a market perspective, if you see, where are the negatives coming in the market? Okay, now earnings, we know that 43% of the BSE 100 stocks have underperformed the expectation. Only 23% is 23 to 25% are who have beaten the index. Now, if you see in the overall index composition or in the GDP composition, I would say around 12 to 13% of the GDP is completely stuck. Okay, so there is sort of negativity coming out of that. I would say from the rural monsoon, etc., there is negativity around another maybe 6-7% of the economy.
Sure.
So I'm saying around from an index perspective, 20% direct hit and maybe another 15-20% of indirect hit. People who depend upon either agri or they depend upon these companies to do that. So I would say around 1/3 of the index, obviously is not doing very well. And it has impact obviously on the banks whose stressed asset again then don't come out very well. But I think with the recent recapitalization, etc., I think that will start to move. If that starts to move, it will move. Now, if you see the index which is doing well, essentially all good companies, good free cash flows, light balance sheets, they are all doing very well.
All right, Anup Bakshi there in conversation with Mini Menon. But just a quick mention on L&T. That stock after opening the day lower with a cut of almost 4% is set to close barely in negative by just 0.5% or so. Avinash, what do you make of the numbers, and is this something that one probably should be looking at? Because one thing's pretty clear, looking at the way the analyst commentary is being panning out on L&T, there haven't been any major downgrades or target price cuts. Probably, you're looking at analyst commentary also indicating that they want to play this more from a second half financial year point of view.
No, exactly. I think if you see the numbers which have come out, I think order inflow as well as EBITDA growth as well as the profit degrowth has been significantly below what the street expected, and I think 37% cut on the profit is definitely a large cut. But what the street is probably expecting is that activity on the ground, especially fresh order inflows, would get a better traction from the second half, and obviously L&T represents the clear infra story. So my sense is, the downside seems to be capped. on the upside the stock may remain in a very close range, and more importantly, hopefully the second half should actually spell orders, from the power, from the infrastructure sector, which the management clearly hinted that was the reason the order inflow was negative in this quarter. So net I would not be surprised that 1700 or maybe 1750 could be a range where the stock could trade. Probably, we would be looking forward maybe for the December quarter where we could see a good amount of traction on the order inflow. So to that extent, Priyank, I think the FI brokerage houses, the local analysts are all looking at some sort of an upbeat from the second half.
Right. Richard, the other earnings you were tracking today, of course, were HCL Tech. Let's get a call from you on some of the IT names as well this afternoon.
No, overall, among the IT pack, there's a mixed bag of trends on the charts over here. In the stock specific, we are bullish on Infosys and Wipro from this pack, and as we have seen after the results, even Infosys has given a good gap up opening and it's continued its high top high bottom formation. Even Wipro from current levels looks very attractive. After the last quarter, after the results, the stock gave a decent corrective action, then went on sideways where some sort of accumulation was seen, and now after the accumulated phase, the trend has turned up again. So probably we are not bullish on entire IT pack and going long in all the stocks, but definitely these are the two names which we are looking for, and Infosys and Wipro, we think that going ahead for next 1 or 2 months, I think they would give decent returns even from current levels.
All right, HCL Tech is the one that's been in focus today on the back of earnings. Avinash, did you get any cues from there? Is that a stock that's been on your radar, just to get a sense on the numbers and what one should be doing? Because the stocks had no signs of recovery whatsoever today. It's been down 6%.
No, I think the markets were disappointed clearly because margin compression was quite severe at the EBITDA level, and I think the profit after tax was much below what the street expected. But one positive factor which came out was the growth in dollar terms. I think it was 3%. In the previous quarter, it was more or less flat. So to that extent, it gives some hope that going forward, the management commentary on the engineering as well as the IMS space, probably growth could kick in later. My sense is, I think, today's fall is largely because the profits were much below what the street expected, and the margin compression happened, I think, from 21 to around 20 odd %. So probably, I think for few days the stock could underperform, but if you look at the structure in the IMS and engineering space, and hopefully if the dollar growth number gets sustained over the next couple of quarters, I would not be surprised, Priyank, if later on maybe there could be a good recovery. I think HCL Tech has definitely not presented very bad numbers at the bottom line level, but clearly what the street expected, it did not deliver. So I would say that from a longer term perspective, it definitely offers good value, provided your time window is at least 12 to 15 months.
Okay, from the mid-cap pack, we have Suzlon reacting to numbers today. Ruchit, a quick check on Suzlon.
Overall, it seemed good on the chart. It was in a consolidation zone from where it has already given a breakout today, and it is a gap up breakout, and we have seen good volumes coming in. But looking at the charts, those who are looking to buy this stock, I would advise them to buy for long term. It's not a trading bet wherein for short term you would get big moves in this. So probably if anyone is looking from long term horizon of maybe 6 months to 12 months, then I think this is a good stock to buy even at current levels.
Just getting a quote from the finance minister where he's saying that lawmakers want discussions in parliament to start. I think I'll just try and connect with. I guess the finance minister briefing is starting. Let's just go across and listen in.
स्वाभाविक है कि कांग्रेस पार्टी में उसकी वजह से बौखलाहट थी और इसीलिए वो चाहते थे कि उनका बयान सदन की कार्रवाई में ना आए। जिस मंत्री के खिलाफ अगर